All right, rolling on gold. Let's go over this. Let's go over this trade setup. Okay. Let's go over this setup right here. Okay, what I said was, when I first logged in, what we do is we look for a buy at 82. First logged in this morning at 8:15. We were at this level right here, right? 8:15 this morning, we're at 12.85. And I said we're going to look to be a buyer at 12.82. Why? Why be a buyer right there that shoots this market all the way up from 82 all the way 89? It happens all the time. We've traded number ones like this for the last 2 years. Sometimes we'll stop it to the exact tick like this. So, how do we do this? How can we be consistently know where these areas to buy and sell? What we do is very simple. First of all, you have to find your bias. If you don't have a bias in trading, you might as well take your money and give it to charity because you're going to give it away. You're either going to be a net buyer or you're going to be a net seller when you first log in. So what you have to do is you got to establish if you're a net buyer or net seller. To me, moving averages are absolutely worthless. If you base your trading off moving averages, you might as well throw your money away also. But moving averages can be very important for trend direction, but not for support and resistance only on one of my trades in the room. Other than that, moving averages is worthless. You want to look for order flow. How I can predict, just like yesterday, the day before, here's what we're doing again today, how you can predict when to buy and sell is based upon the order flow. What I've got is I got these green dots on these 2 5-minute charts. I got a 5-minute chart on the bottom left on gold here, and I got a price chart here also with the moving averages on. The volume chart to the bottom left tells me where possible resting buy orders are based upon volume, and the price chart based upon price is resting right here with my moving averages. So I can dictate where I need to be a net buyer or net seller by looking at these green dots. I'm a net buyer at either 82 or I'm a net buyer here at 12.84. And I know exactly when it comes down that level to look for a pulling bar on my 89 tick for a green bar reversal. And that's all I do on market profile. It's as simple as that. If the 5 minutes in an uptrend, I want to buy the first test of low value area right here, LVA. I want to be a buyer of the first test of low value area. And that's it. That's my number one trade. If I want confluence, I can use my automated Fibonacci indicator that I have for Ninja Trader for you guys and gals. It will fire the major extension levels, which an extension level came right here. I had a blue dot on my chart down here, or on the J extension. And what it shows exactly when the Fibonacci was firing off to give a buy. So not only did I hit LVA, on our own charts we had the extension level firing off to give a buy signal. But let's go over this bicep, how we get in. So here at 85, I projected 82 for a bounce. I said not to take the 84. Why? I said not to take this level right here for 84, the first LVA, because it already tested once, or twice actually before. It tested right there, and I told traders in the room that would be a stop out. It should break right through that low. 82 should be the low. We should go right up from there. Why? Because it's the first test of low value area. This bottom left chart at 84 already tested once, so we don't take that trade. This 82 never tested, guys and gals. It never ever tested. So the moving averages are in an uptrend. My bias was up. I want to be a net buyer here at 82. Sure enough, I get down to 82, and then I grow to my criteria. I teach you traders in the room to look for what? A green bar reversal right at 82, but see if there's more supply or less supply down there. See if there's major divergence. I teach you what triple divergence is. I actually wrote a book about this. It's the best divergence you can actually get. It's when you get two higher lows, right here. You get two higher lows. 1, 2. That shows you there's major demand right to 82. So we get a higher low, but more importantly, we get the green bar reversal right at the low of 82. Check that out. The market has now moved from 82 all the way up to 98. All right. So it's moved well over 100 plus ticks, right, on that move up just from the buy signal at LVA in the first test. And that's it. That's all we do. The first test of LVA in an uptrend. You can just take the number one setups, one setup in this trading room, because you can predict the auction market every single day based upon these 2 5-minute charts. We've been doing it for 2 years in the room. Hundreds of trades that look exactly the same. Some of them stopped at the exact bar like this one. Okay, go over to oil, Gerald. Let me show you the oil that I posted this morning. On oil, if we look at oil before we shut this off, you got to have your net bias. The net bias is up. You take 0 shorts. Absolutely no shorts. Let all those whoever counter trend trades the market, let them lose their money. It's their own fault that they keep pounding their head in the wall because they want to keep countering these markets. We're different, right? Just like that gold trade that went from 1282 all the way to 1298. All right, 16 points, a $1,600 trade with a $150 risk, $1,600 trade potential with a $150 risk. Our maximum stop loss is 15 ticks on these trades, right? In a matter of minutes. Same thing on gold, on oil. You got to establish your net bias. We're not counter trend traders. 90% lose in the futures market. Active Trader came out and said that. Around 90% lose. Why? Because they counter trade the market. They keep trying to jump in front of a runaway train or catch the falling knife. We don't do that. What we do is we have 3 setups. That's it. 3 setups right here. That's all we need. Market profile is not difficult. It's not hard to understand. It's the 5 minutes in an uptrend, moving average crossed over. We buy the first test of LVA, low value area. We're not selling the HVA, right? We're trying to buy the first test of LVA. So what do? LVA is established at 64 here on the bottom left volume chart. HVA is established at 65. So what am I going to do? I come down. If I come within 2 or 3 ticks of LVA and HVA on the number 3 retest like I posted in the room, I'm going to be a buyer. Okay, at 8:15 right here, I said we'd be a net buyer here on the first test. Sure enough, calls a low again. So 2 number 1 trades back to back were 1 for 1 on the crude oil. Obviously, gold was a $1,600 potential trade off of $150 maximum risk. Awesome. And then we got the trade here. And that's how you got to do it, guys. You got to project ahead. Now, what you do is you scale, right? You scale using my symmetry dots. My symmetry dots are used for the number 2 trade to buy the breakout of HVA. Now, the number 2 trade with a breakout, this is a rejection breakout. I teach you traders, we get rejected in a hard uptrend. Check this out. Check this trade out. Right there it is. If this is called a number 2 breakout because of what? Because if you get rejected or within 5 ticks of HVA high value area, we're not selling high value. We're smarter than the average bear, right? We're going to buy the breakout with the 2/3 body candle close. Thanks for coming to work. Look at that breakout. Because if it either rejects and goes back down, you can buy the breakout right here on a 2/3 body candle close, according to my methodology. Or you can look for a what? A number 1 pullback. So my number 1 and number 2 trades have worked out both on crude oil this morning. All right, since 7:30. You have not missed one heartbeat on market profile this morning. There's no way you could have got stopped out on either one. No way you could have got stopped out on number 2. Big trade, 60 all the way up to 106. No way you could have got stopped out on number 1. No way you could have got stopped out on number 1 on gold. So gold 1 for 1. Your crude oil is 2 for 2. 1 for 1 this morning on crude oil from what I posted in the room when I got in. But you keep it that simple, guys and gals. You keep it simple because we're not blindly closing our eyes and picking these support and resistance levels. You know, the market is not my opinion doesn't count. Your opinion doesn't count. It's where the order flow is. The auction market is very, very, very predictable. Okay, these specialists with a level 3, they can see where stops are, and these traders on the floor, they've had this. You know, in the 1990s, used to do this all the time. But the thing about it is that it's an electronic market now. We can predict. I can predict these things ahead, like I did this morning on gold for that $1,600 trade. We can predict these things way ahead of time. You know, this is not after the fact baloney. We're using a moving average or a moving average convergence divergence, or you know, something simple like that where it's lagging. If anyone uses a MAC, right? If anyone uses an MACD, you're not trading the market correctly. You better evaluate your program and do something differently because you are part of the sheep. You will get slaughtered. If you're using moving averages, we have several traders coming from one trading room that use moving average for buying and selling, got killed. Absolutely getting killed in that room because you can't use moving averages to buy and sell all day long. They'll kill you. The only thing we can do, the only thing I can do and you can do is to have high probability trades off of areas of support and resistance, and that is the auction market. Nothing can beat the auction market. You know, Pete Stoudemire came out with it in 1985 with a few colleagues. They invented something else in 1994 called volume profile. And then now he has the volume strips, which we're working with Pete Stoudemire, his right-hand man, Steve. We're trying to bring that to the room also. It's cutting-edge stuff here, guys and gals, that you can predict this stuff 30, 40, 50 minutes ahead. You just got to make sure you understand what the number 1, number 2, number 3 setups are, and that's it. And you trade those with market profile. If you want to trade my ATRs are gorgeous on the 2-minute chart. Obviously, it caught the high on oil here this morning. That's a counter, and it caught the high on gold this morning. The ATR trades are 1-for-1 this morning. Off of that, here caught a little buy bounce here off the buy bounce on crude oil also after it went through it. But the bottom line is the easiest way to do it if you're a new member is just trade the overall number 1 setups.